Greetings traders, and thank you for joining with us today. Today I'm going to do a special webinar that's going to explain all the basics of Boomerang Day Trader and how to use it successfully to trade every day. We have many traders that use Boomerang for successful trading every day, and we have testimonials in our blog at boomerangtrader.com that show how exciting it is and how many referrals we get as well. In fact, we've become one of the most popular day trading softwares on NinjaTrader, with a tremendous amount of licenses sold. So what I'd like to show you today is I'd start out with the basics, go into the methodology, show you what a volume meter looks like and how we use that. I would like to invite you to look at a brief tutorial that we have on the blog about using the ATM trade brackets to set up your trades, and just some of the basic methodology and everything. The webinar will run about 45 minutes, and all your questions should be answered there. Otherwise, always feel free to email me at mohan@daytradersaction.com. Now, before we get started, I wanted to show you this disclaimer here, which we always show traders before a webinar starts and on all of our sites and everything, as required by the regulators. First of all, the past performance is not indicative of future results. Futures and options trading involves substantial risk of loss, and it's just not suitable for all investors. Don't trade with any capital you cannot afford to lose, because in trading, losses are part of our business. So the first thing I want to show you on Boomerang Day Trader, now this is just a recent chart. Number one, I'm using a 450 tick chart, and we're using the 6E contract, which is one of my favorite day trading contracts. The 6E is the Euro FX market. Now, Boomerang Day Trader works very nicely on several active markets that are extremely high volume during the day trading time frame. This can be the TF contract. It works great on the YM and the ES. These are the U.S. stock indexes, as well as you can use it on the NASDAQ, the NG contract, crude oils, QM, and ZG, which is gold. So you can use Boomerang Day Trader on all these different contracts, and it works quite effectively when the volume is looking high, and we'll talk about that in a bit. So now that we've covered most of that, let me go over the real basic structure of the Boomerang Day Trader. These lines, these are bars, and these are candles in the chart here. And what we have is first of all, two basic moving average lines here. We have this red line and we have this orange line here. These are the basic bias indicator lines. When you see the red line crossing the orange, it is generally a trend on the bullish side unless it gets overextended. Similarly, when it crosses over, as you can see here, on the downside, it's a bearish move until it gets overextended and recrosses back over again. If there's a fast spike move, like in this case here, you'll often find that it'll form what I call a fat channel or a fat bubble, and they'll reverse pretty quickly. Now, in addition to those two lines, we have on the colors of the candles match what's called the underlying trade select line. See this dashed line here? It's green. When it turns green, the candles will change from gray to green in accordance with the line. It's an extremely precision line here. So when it changes, it'll change from green to gray to red. And the candles will change in accordance with that color. That is the trade signal line, and we also use that for when the prices pull back to the signal line and give, as you can see here in the case of a sell, a magenta colored dot on the signal line and a blue colored dot on the buy side, on the buy line. Now these dots, when they appear in a millisecond on the trade signal line, an alarm also goes off. Now you notice there's several of them on each one, and that's because once this arrow here marks a new trade channel opening. Once the trade channel's opening, it'll only mark within the first 6 candles. 1, 2, 3, 4, 5, 6. So you can see here that only 4 dots are tapped and marked. Similarly here, the trade channel opens, 1, 2, 3, 4, 5, 6 candles passes, but you've only got 4 dots. That's 4 opportunities to grab a long trade, in this case, on the signal line. The next arrow that is shown is the bias accelerator. When it's red and it appears within 4 candles of a new sell channel, that's an acceleration alert move. And you can see that the market made a very strong accelerated move. Here we have one again. 1, 2, 3, appearing within 4 candles of the new open trade channel. You get an accelerated move. This is an industry first and something I've created for Boomerang Day Trader, which makes it very unique. So again, you have the red line, the orange line here. You have the arrow opening the new trade channel when the signal line crosses the red line. You have the dots on the pullback to the signal line, which is this dashed line running through here. The dots signify an entry. And then you have the bias accelerator arrow, which tells you when a larger scale move is going to start. That is the chart section of the indicator of Boomerang Day Trader. When we go below, we see the bias indicators. Bias indicator number 1 on top and bias indicator number 2 on the bottom. Now what happens here is when we get a tap on the signal line, I'm just going to go into the methodology for a second here so you understand how it all correlates. When you get a tap on the orange line by the prices, especially if the prices trade through the orange line, you look down here and you see that the bias indicator 1 and 2, bias indicator 1 just needs to be gray or green or gray or red. In other words, on the same side of the 0 line with a matching bias indicator number 2. That tells you to trade at the signal line on the next pullback, which is alarmed and dotted right here, which is in this case 1.2356, or we'll just say 56 for ease. Now we're looking for 8 ticks on a move. So here goes the market easily giving us 8 ticks, and with the bias accelerator you might have been willing to hold out for a larger scale move, which I encourage traders to do. When you see a bias accelerator alert showing up pretty quickly after your entry or before your entry, go ahead and hold out for a little bit more than the 8 ticks. It's going to be worth it. We see the same thing happening here. Now, one of the rules too is we don't trade unless we get a tap or trade through the orange line. However, if an extended move occurs and a trade bias accelerator sets up here on the new trade channel opening before the orange line, you can go ahead and take that trade if the bias accelerator alert shows up before you hit the orange line. So this tap here at 69 with a bias accelerator alert could have been held for more than 8 ticks, or just scalp the 8 ticks and you're still in good shape. Now getting back to the bias indicators, they hit peak levels when they tap this magenta line up here, and they also start trading over this blue line here, and in some cases they'll go as high as the double magenta line up here for a really strong move. So for right now you can see they're showing an acceleration blast to the upside, getting exhausted here on bias indicator number 2 and showing peaking levels here, not quite hitting the magenta on the top, but hitting peaking levels, then turning back under the blue line, which is a sign of the market starting to neutralize or even turn bearish. When you see these gray candles coming up under here, do you see that? Along with the red, this is telling you it's a short opportunity. You don't take that trade though until you see the bias accelerator, unless they tap the orange line. Then you could have traded right here at this signal line, and down they came for a nice extended move. This is the basics of how the Boomerang Day Trader works. Now, I also have a video tutorial on the blog at www.boomerangtrader.com that shows traders how the ATM brackets work and how those are set up when you install Boomerang. And with one click on the market, I'll show you where that is here. It's over here under Chart Trader. It'll set up this area here, and it shows your buy and your sell at the market indicators and your close button, which flattens the position out, how many contracts you want to trade here. And then down here you can set up your ATM special conditions. In our case, we're going to put 8 and 12 on there. So when we place a trade, with one click on the buy or sell, it's going to put an automatic 8-point exit and an 8-point exit for profit and a 12-tick exit for a stop. Now these can be simply dragged and clicked to be moved on the charts. It's very, very effective in that way. So far this is how Boomerang Day Trader works. You're looking for a move on the prices across the red line, a pullback to the signal line with this channel, the new buy channel opening, and a simple confirmation of the bias indicators on this side. The bias accelerator alert, which will usually appear later. It's not going to appear always right away. It'll appear after it's based on a chart formation that occurs within the pattern in the chart, then it appears. So if you're in a trade and it appears after you're in the trade, you can hold a little longer. And if it holds before you get in or right about the time you get in, then you have a confirmation that that's going to be a stronger trade in that direction. Then we have the second confirmation, which again, as mentioned, is this red line trading over the orange and the prices moving up in accordance with that until basically the red line starts to get a little too far away from the orange line, and that's when things start to tighten up again. Then we get a crossover of the red over the orange. Now, it doesn't always happen that way because sometimes the market is, in this case of this chart right here, very bullish. So prices are all of a sudden, they try to cross over, but then they jump right back over it. That's a bullish sign, obviously. If you get a red crossing over orange, we're not going to take a buy signal. However, if prices trade back up through the orange line, then this crossover is canceled and we look for another buy signal here, which is what happened. Here's an example for where prices came down, they peaked out. We got a bias accelerator alert, got a sell signal here on the signal line, any of these locations. The red crossed the orange line to the downside, but in this case, it kept going in a very, notice how it's a nice thin channel. It just kept rolling to the downside. There was no counter crossover. In fact, we got a second level sell here with the red holding under there. Now notice how, now this is coming into the close that day, so there's no trade here, obviously. But I'm just giving you an example how that works. Let's go back towards the opening because I want to go over with you some of the ways to handle choppy markets. Today showed, let's see here, well, this is right around the opening, and I don't usually advise traders, wait till 10-15 minutes at least after the opening, so you wouldn't have traded this. But handling choppy markets is basically pretty simple. You're looking for elongate. Let me find a choppy period. Now this is in the aftermarket, so it's not that good. The volume's very low. Here's a choppy period, for example, on the previous day, where the market has made an extended move to the downside, and now it goes into a little bit of a chop mode. Now, first of all, you're not going to be making a counter buy signal here unless you see the prices tap the orange line. When this orange line is really steep, you want to only trade when prices trade through that orange line, because otherwise the trend is not over yet. Now, in this case, we did get a buy accelerator alert, which occurred 4 candles within this. So theoretically, this could have been a buy signal here. And had you taken the buy signal at 81, they came down to 75, so well within a stop, this would have worked out as a trade. I'm just giving you an example. I've never seen this chart, use it directly. I just didn't plan this. But this would have worked out as a trade, but you would have had some choppy confusion here, and you can see counter arrows and all that, but you would have held through this with the stop. But the reason this was more of a choppy move that ended up working out on the buy side was because of this steep orange line. We do not want to trade against a steep orange line. The way to determine how it's steep, you see my cursor here when I put that up against the orange line. You notice my cursor going out here and the length of this. I call that like a pizza slice. If that's a big pizza slice, then stay out of the market until it flattens out. Notice when I put it here, notice how the little pizza slice here is a lot smaller. So that's the way this works here.